today we're going to talk about the nonsense that's going on in the markets. Is it real? Like, is this fucking real? Can the markets continue to keep going up and doing what they're doing? I mean, I don't know about all of you, Steven. I don't know about you, my partner in crime here, but dude, like, why did the market bounce? Why did the market go up? Like, is there any substance, any reason outside of the manipulators are just manipulating more? I don't know, man. It's insane, but that's what we're going to talk about today. I am really excited today to be going live from nice Las Vegas, New York, where I'm out here at a mastermind talking with lots of really smart entrepreneurs and extremely wealthy people. And you know what we're talking about? The same shit we're going to talk about today. So what happened in the markets last week, man? Like, what is this whole nonsense? That's it's party time, baby.
It's been crazy. It's awesome you're out there in Vegas right now. Looks like you got the Beatles, what is that? The Mirage behind you, and some beautiful hotels. So having a good time out there. I know you're with an awesome group of entrepreneurs and investors, and some of your mentors are out there as well. So I'm sure you're having a good time. I'm down here in South Florida and just doing all the normal Christmas stuff this time of year. I think I was at like 3 different parades over the weekend, and getting together with friends and family. And down here in South Florida, it's like COVID's not even in existence in this world, but we look at what's going on in the markets and it tells a completely different story, right? I mean, last week we had crazy down days to close the week. I don't know what the percentages were, but everything was down. Everything was in the red. I would look at my phone and everything was dropping like a rock. And you turn on the news or read some of the articles coming out, and a lot of it gets blamed on this new COVID variant, Omicron, which I don't believe there's been a single death from Omicron yet. So I would imagine that'd be good news if there's a contagious virus like a cold that's not really hospitalizing or killing people. But nonetheless, it looks like the markets are starting to realize that finally this week. And that's why I guess, they're saying that's why we're seeing things come back up. Now, I'll just give this a little warning out there. When we see large drops like this and these real quick booms back up, typically that's a bull trap. Typically that's something, and Chris, I'll let you expand on it. But unless you're a professional trader, right now might be the time when professional traders and smart investors are selling on the way back up, when most people are getting back in the excitement of buying on the way back up. But if you want to talk a little bit about that, Chris.
Yeah, 100%. A lot of people get caught up in that. And, for all of you, I'd love your opinion on, last week's bounce and even yesterday, and what your thoughts are on it. But what a bull trap is, I call it when it bounces. This happened back during COVID, and the market just unexpectedly does a bounce. Now, some people would say it bounced off a support or resistance level, or there's a lot of different reasons. But the biggest thing you've got going on here, and the one thing you cannot argue, I don't care who you are, I don't care how much you think you cannot argue this one point. The fundamentals don't support what's going on in the markets. Now, you can get crazy, and I was talking with a really smart crypto guy, Spencer Montgomery. He's on our 3-day trainings that we do, and we got talking about this. We were talking about Bitcoin, and he was showing me the correlations between the S&P 500 and Bitcoin, and he was showing me this move up that we've had in the S&P 500. And if any of you, I don't know if you guys can see this, but if we came down in COVID and we kind of started coming up, and now it's literally, I mean, you know what a hockey stick looks like. It's a hockey stick. It's literally going straight freaking up. And we had some certain levels we were talking about, and he got into a mathematical equation that basically has been used in the markets and everything else for a very long time. And he showed me when the markets hit this level, they're either going to bounce down or bounce up. And Harry Dent Jr. talks about this a lot too, about these levels. And we are in some very, very interesting times with the levels and just the patterns. I mean, if any of you understand market patterns, there's a 10-year pattern, okay? There's a 45-year pattern, and there's a 90-year pattern. They're all converging. Matter of fact, a couple of them have already passed, but the government printing press, the modern monetary theory that they're doing is creating this false reality. Well, it's not really false. It's real money being pumped into these assets and pumped into the system, which creates asset bubbles. Do any of you remember 2006 and 7? Were any of you alive during that period? I think all of you were. That was the same scenario. Since the early 2000s, when the dot-com crashed, this has been happening. It's been escalated since 2008 because the printing press has been put on high, okay? That literally, like, if you have a radio, turn it all the way up, to the point where you're like, holy crap, turn that down. That's what the printing press is running at. And when it does it, it creates these artificial bubbles. It creates a false sense of reality because the money that's in the system, although it is real, it's fiat money the government's printing, but it creates these bubbles which cannot sustain because there are not fundamentals. Profits do not, except for maybe in pharma, profits do not support these levels on any company. I don't care. Maybe you could make an argument with Apple. Maybe you could make an argument with some of the pharmas. Outside of that, folks, none of these stocks are fundamentally making any sense. Now, Stephen, one last comment on that. To support that, I want all of you to actually just think of Warren Buffett, a fundamental investor. He fundamentally analyzes stocks, and that's how he makes decisions to take positions in stocks and large ones. Is Warren Buffett buying anything outside of maybe some healthcare, some pharma, and some things that are surrounding some of these things going up? That is it. He is selling most everything. Same thing with Bill Gates, same thing with Mark Zuckerberg, same thing. Well, Ray Dalio won't tell you what he's doing because he can't, because he runs Bridgewater Capital, but he's very bearish as well. If you look at his portfolio makeups, they've gotten more and more conservative because he knows something's coming. Stephen, what do you have to say about this? And I want to go to the audience too, because we got some good stuff coming in here from TikTok that I want to comment on.
Yeah. And, I made a post on social media that got a lot of reactions over the last week when everything was tanking last week. Just, I simply asked the question, if things, if you're of the belief that we're going to see a market correction or probable crash, let's say 40 to 60%. Or maybe even more, in crypto space, for instance. But what's going to happen first? Are we going to see the stock market come down and crypto follow? Are we going to see crypto lead the way on a drop and then the stock market comes after? Is it going to be an inverse relationship where the stock market crashes and all of a sudden Bitcoin and crypto starts to take off on the upside? And what's that look like? And that's one of the things we really would like with this show to happen, is to get you all more involved and more, a part of it. And then those of you that make really intelligent comments and have, good opinions on this stuff, we want to bring you on the show. I mean, chat in the box right now if you'd like to be on WTF with us one week, just to share your opinions and your thoughts. So make sure you're following us on Facebook, on YouTube, on Instagram, and, comment when we make posts like that, because we're looking for those of you that have intelligent opinions or maybe outside the box thinking. I mean, I love to hear what people are thinking out there that's not the mainstream narrative. You're not just repeating talking points. I mean, for me, I'm looking at two charts right now, and I can share the screen here, but it's Bitcoin over the last 3 months and it's the S&P market over the last 3 months, and the charts are essentially identical, right? I mean, they track very, very similarly, like you were just saying, like Spencer was saying. And that's what I've been saying all along, because one of the arguments for crypto, right, is it's a hedge against the stock market and against the traditional means of investing like that. But if it tracks the same ups and downs, how are you hedging against it? And I've never understood that argument in crypto. So if you have a different thought on that, we'd love to hear it, because I'm not married to my ideas or thoughts in any manner. I can be easily persuaded one way or the other, but you better bring in a good argument, because I do have strong beliefs in what I'm saying right now.
Yeah, we got some comments that came in. One of them came in from good old TikTok, my favorite. And I just want to make a clear comment. I wore my shirt today because this is my TikTok shirt. Haters need hugs too. So a comment came in on TikTok that said, blah, 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 blah. So obviously that person very much agrees with what we're saying about these markets not making any sense, because he couldn't even say anything but blah, 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 blah. We have some very intelligent haters on TikTok. So thank you for your comment. We appreciate it, you piece of shit. Anyway,
Chris, he's probably let me pull this up real fast. Your friend on TikTok is probably a member of this elite investing club that I'm pulling up on the screen right now.
TikTok. Let's see. There we go. Jim Cramer's investing club is bringing new people into stock market.
He's probably part of Jim Cramer's new investing club.
Good idea, buddy.
Listen to me. If you follow Jim Cramer's advice, you deserve everything coming your way. That piece of shit last week talking about making the United States military enforce vaccine mandates on the entire population. That guy's been a hack for years, and that just solidified it. And if anybody wants to argue with that, bring it on.
Yeah, the funny thing about Jim Cramer, and I'm a little bit different, so I don't hate Jim Cramer. I think he's a very good showman. I think he's very good at bringing attention to himself and creating a cool show. Like, people watch him, with the bells and the cows and all that shit. It's entertainment at its finest. Hey, what the F happened is fucking entertainment. You like me to swear? I swear. We argue, we rant, we rave. That's what the F is all about. We want to have you involved in that. And I don't care if it's just saying blah, blah, blah. It doesn't matter. Whatever you want to say. But, the thing is, you got to really take some things that you see in the news as gossip. And some things you see in the news is entertainment. And entertainment doesn't always equal dollars. By the time Jim Cramer makes an announcement that a stock is good, it's all over. It's a pump and dump in most cases. Like, his track history, if you follow his track history, isn't so freaking good. That's what we should do, Stephen. We should pull up the track history on Jim Cramer, on all of the things that he's like supported and said. I bet you any money it's probably pretty crappy.
It's a little embarrassing.
All right, so let's get back to some tangible stuff here. So we got Ethan said, James Rickards, and we all know James Rickards. He's written many books. He's a gold bug, very good economist, different than Harry Dent. They're kind of, on two sides of the coin, but I love James. I love his book, The Next Great Depression, and what is it? The Death of the Dollar or something like that. I was just reading that one. But he said James Rickards is predicting that it's all going to drop big when the CPI report comes out on Friday. I bookmarked it on my calendar just to see if he was right. Now, economists make these kind of predictions all the time. Harry Dent's been making lots of predictions. Jim Rickards is making lots of predictions. And, they're all right in their own way. They're using different levels. They're using different things. I think the CPI would be good. And CPI stands for Consumer Price Index. I think that's a good measure. Do I think it's going to be enough to drop the market when the government's, got these printing presses running full press? I don't know. Ethan, that'll be a good one to mark. It'll be a good one to watch. It'll be a good one to see if it really does. We are literally walking on thin ice. If any of you have ever been to a cold area like I live in Buffalo, New York, and you walk out onto a lake about this time of year, it looks like it's frozen. It's not. You're going underwater. Well, we are on thin ice. That's what the markets are. They're a house of cards like I've never seen before. And I get people all the time saying, oh my God, yeah, but I made 40% last year. Good for you. Like, do you want a cookie? You want a cookie and some milk? Like, come on, good for you. Everybody made money. Monkeys can throw darts at the wall, and they did a study on this, and make money in a bull market. No one is smart when the markets are going straight up. You're not smart. Jim Rickards isn't smart. Harry Dent isn't smart. You know who's smart? The people that actually can keep the money that they make. Now that is a genius. So I challenge every one of you. I don't care if you're on TikTok, Instagram, Facebook, YouTube, any of the channels that we're streaming on right now. Keep your money. All of you have made great money. And I think that's phenomenal. For the first time in a very long time, you can literally look around and people literally have money. Like, during COVID, a lot of people paid down debt. Yes, they probably racked it up. You should see it out here in Las Vegas. The amount of people gambling, they're probably all losing their money, but we won't even go there. But it's awesome. People have disposable income again. They have money. Some of it's the government money they gave them. Some of it's money they're making because they got big raises at work because, hey, nobody wants to freaking work unless they're paid golden nuggets. But, it's awesome. However, you're being stupid with your money. You're plowing your money into markets. You're plowing your money into things you don't even understand. And some of the laws of wealth state exactly that you should not do that. If you're seeking unrealistic returns, I'm having a conversation with some crypto guys that are investing in some things I have no idea about. Okay. And I'm not going to be a crypto expert. We are going to cover some Bitcoin and some Ethereum today, but he's talking about it. He's talking about 160% return. Stephen, think about that. Imagine if we all could just make 160% return. It was just as easy as you just buy one of these shit coins and you make 160%. We'd all have Ferraris. I was just driving Ferraris yesterday. It wasn't mine, but if that was the case, I'd be my Ferrari I'd be driving. But that's not the reality. The reality is, it's great to sit there and boast and brag that you're making 160%. It's great to say that you're Coinbase account is up 200 or 300 or 1,000%. Keep it. That's my challenge to every single one of you. You want to tell me you're smart. You want to come on this show. Show me how you plan to keep your money. And what do I mean by that? Don't lose it. Because when the whole thing goes down, when the stock market goes down, when the crypto market goes down, which it will, they are almost directly correlated, you will not keep your money because you are taking unnecessary risks, and therefore your money will flee you because you're in something you don't understand, or you're in something you think you understand that just ain't so. Stephen, what do you have to say about that?
No, it's just, I say a lot that crypto reminds me a lot of Vegas. Like, to me, if I'm going to gamble my money, which, I believe a lot of these shit coins and things like that are purely a gamble, right? I mean, I think we can all agree on that. It's a pretty high risk gamble. But if I'm going to gamble my money and be willing to risk it, I'd rather be where you are, Chris, out in Vegas, sitting at a craps table or a blackjack table all night, getting free drinks, having a great time, bullshitting with people and having fun and making new friends and enjoying myself in the bright lights of oxygen pumped casinos out there than sitting on my couch with my iPhone, looking at my Coinbase account, hoping for the same gamble. And, Kenny Rogers, I think, said it best. You got to know when to hold him. You got to know when to fold him. You got to know when to walk away. And I think that's what you're saying right now is, you challenge people. Hey, make all the money you want in that Coinbase account, but let's see how much of that you actually keep and use in your life. And, I'll give my brother a lot of credit on one thing real fast. He's been investing in crypto for many, many years now. He cashed out a bunch of his crypto that he made a bunch of money on and used it as a down payment on an Airbnb cabin up in North Carolina. So he took profits from crypto. He's keeping them in a long-term asset that's going to provide income to him and his family regularly moving forward in his life, and has all the extra crypto in there. That's basically house money now. So strategies like that, I absolutely love. But, investing is a strategy. And if you have a strategy, stick with it and make sure it works. To me, the stock market is it's so high. It's not driven by any reality right now. To me, that's a huge gamble. So I'm willing to take risk. I'm willing to gamble, but it needs to be when the time is right. To me, it's too risky. It's too much of a gamble right now. I will play things safer right now. So I'll keep money sitting in my own private bank, for instance, in their compounding instead of risking it in the markets, or I'll find those deals that I can lend my money on, safer things. I'll happily take a 10 or 12% return all day, even 8% over, risking at this high risk levels right now to make 15 to 20%. Now, will I go for those investments? Yes, absolutely. But to me, this right now in this market world that we're in, it just doesn't make sense to go there. And that's what I just hope that people understand from, these webinars and these trainings, these podcasts that we do is, open your eyes and ears to, what is everybody else doing? What's out there? What are the other options? And decide what's best for you and your family and follow that strategy.
Yeah. We got a lot of stuff coming in from Instagram here. I'm sort of ignoring TikTok here because we don't have too many people on TikTok. Guess everybody's sleeping from the hard night out, but we are going to BB Singh. We are going to cover that with crypto in a second. So on TikTok, we'll come over there, but on Instagram, we had a lot of chatter coming in when you were talking about that. And, some people agreeing, but, I think listen, I understand everybody that wants to make the big returns. I mean, it's hard not to, Stephen. It's hard not to want to make 160%. It's hard not to want to buy Shibu Inu when it's, 0.00000000053, cents per share. But what people don't understand is it's the old penny stock thing, right? People think that buying a penny stock or buying like an inexpensive, shit coin like Shibu Inu is a good investment because they can own more because it's cheaper. All I can tell you is you're not even a penny away. It's hard to say. You're like a fraction of a penny away from being completely broke. And looking at that, you'd be better off buying Bitcoin and owning a very small percentage of Bitcoin than you are buying Shibu Inu and owning a whole bunch of it because you think you're going to make a lot. It's the same math. Like, people just don't understand math. Did they, Stephen? I don't know, man. I mean, we went to school back a while ago. I graduated in 96, but did they stop teaching math in school and stop teaching compound interest? Did they just start teaching these fancy algorithm things in mathematic classes like Math 101, where they teach you how to be an engineer and teach you how to be an employee and forget about business math and simple mathematics? Because something's wrong, man. People can't do math anymore. Because
you joke, but that's literally happening in places right now. So
it's insane. It's the same thing, listen, like, Rick's on here. I just put his comment up, and one of the things that, you know, a lot of people that, you know, we know, my friends like Rick and lots of other clients, you know, the thing that they love is they love investing in things that have a tangible backing, something that has substance, right? Like, does Shiba Inu have any assets? Does Shiba Inu have any fundamental backings? Can you securitize Shiba Inu with anything? No. You know, in some of these coins, I want to explain one thing because we're getting into the crypto. And this is, again, I want to be very clear about something. I am not a crypto expert, but you know who is? Spencer Montgomery, who is out here. He's one of the founding members with me of Power Room Mastermind, where we're at. He is the utmost expert when it comes to crypto. And not only that, there's lots of other experts out here. And we're talking about this phantom reality, you know, not the metaverse, but this phantom reality of returns. And we were talking about like how some of these shit coins can pay these kind of returns, you know, and say, we're going to pay you 160%. I said, I don't get it. None of it makes any bloody sense. And he says it makes all the sense in the world. He says, when they're judging the returns, you got to understand that some of those coins, you can't even buy them in your thing. You have to trade other coins to it. So you have to take a Dogecoin and trade it for this other coin. Again, correct me, I might be a little off in explaining this, but he did a better job. So you're trading one worthless coin for another worthless coin. And that is driving this return. So if you've got worthless coins and you've got tens of millions of them because you bought them at 0.00000000053, you know, a fraction of a cent, why is it hard to say 160%? It's not even real. It's not even real. Why is it that in the Wall Street world, that's not the case? You don't have stocks that pay you 160% stated yield or dividend. Have you ever seen that, Stephen? You ever see a stock pay a dividend of 160%?
I'll take it if you
I'm sure Kramer would be talking about that one, wouldn't he? So, you know, it's just sometimes when you're depending on where you're at. Now, some of the people doing crypto and a lot of these shit coins, like they're making lots of money. You know, it's trading these NFTs, you know, the metaverse stuff, buying land in the metaverse. These are the conversations that have been going on out here. And it's fascinating. It's scary. If any of you have ever seen that movie, it was kind of like the metaverse where Driver Player One or something Player One. Do you remember that movie?
Ready Player One.
Ready Player One. Like we might actually be entering into that movie, like that world of reality where we're not even in reality. Like what I see behind me, that's real, man. I can jump out that window and I die. I can go kick that building. But in this fantasy world, the metaverse, like none of that's real. Like you don't really die. You just take the goggles off, right? You guys know that. And they're staking and selling land in this. Now, maybe there's something to that because there very well could be a time where literally when we go to work, we actually log into our computer, put goggles on, and we're at work. We no longer actually get in a car and drive to work. Like that to me is not a world I want to live in. I watched The Matrix and I took that shit pretty fucking serious. Like there was the fantasy world, right? Red pill or blue pill. Give me the shit world that I can actually control and understand versus this fantasy world. I don't know how all of you feel about this, but let's get someone to kind of talk a little bit about this. I want to talk about crypto. I want to talk about some of these shit coins and some of the stuff that we're talking about with these big returns. Because I know a lot of you, especially here on TikTok, a lot of you understand this far better than Stephen and I do. And I got some stuff coming in here. Let's see what we got. Let's see. Anchor protocol on Terra Luna gives 19% APY fixed. So 19%, you know, that's still pretty darn good, but it's not 160. And he's talking about Terra Luna. If anyone knows anything about that, that's Demons, the Nez, I believe is the name there. But you know, it's just, I can't make any sense of this. And just knowing the laws of wealth have been the same since before Christ. Since back in the times of Babylon, like they've always remained the same. And one of the laws is if you seek unrealistic returns, first off, you're going to find fraudsters and scammers because that's where they reside and that's where they live. And they're going to lead you down a path where they're going to win and you're going to lose. But I just don't understand this world that we're entering where people think that that's real. Is it because they just don't know what's not real? Or is it because they literally are just so blinded by these fake returns and these big numbers on a piece of paper that says they're rich and then the next day they're poor? Like, what is it, Stephen? Help me out here.
Yeah, I'm not very speechless too
I don't
often.
even have a comment.
I don't know what it is, man. It's craziness. I'd love to hear what other people have to say.
Yeah, well, the audience isn't saying much here. So I don't, either they agree or they just don't know like we don't know. They're like, I don't know, man. I don't know. I've got my account up here and I'm a multimillionaire. Great. Good for you. Keep it. Keep it. That's my challenge. Keep the money.
I do have people reach out to me sometimes though to ask about the crypto staking, right? Because you can stake your coins, which basically freezes them where you can't sell them, and then whoever they're with will pay you, 5 to 10 to 15 to 19%, I guess 160% in the case you're talking about, annual returns by keeping the money there. But if that coin is a shit coin and it's in this volatile world, and then that coin loses 99% of value, you're now getting paid 19% returns on 1% of what you had in there before. So that 19% return that you staked doesn't look that good any longer, right? Yeah. So I just feel like it's a way of kind of locking you in and not giving you the liquidity of getting out quickly when you need to, which a lot of these cryptos fall so fast you don't even have a chance. But it's locks you in, and I think that's their way of trying to stabilize it a little bit where you're not getting as much movement. I don't know why they're doing it, but that's got to be wise, just to try and keep the value up.
Yeah, it's got to be something like that. And what's up, Leo? We got some cool cats joining us.
Leo,
here.
I haven't seen Leo in a while. How's it going, Leo?
Oh, this is awesome, dude. Did you see this comment here from Connor? Man, did you see that girl in the red dress, though? Yes. If any of you don't know what we're talking about there, it's in the Matrix. You guys got to check it out.
That they will fight to protect it. Were you listening to me, Neo? Or were you looking at the woman in the red dress? I was. Look again.
It's an interesting time, and unfortunately, these times right now, which seems so good for so many, are going to come crashing down eventually. And when is that? Well, Jim Rickards is saying maybe Friday with the CPI report. Harry Dent is saying probably into mid to late 2022. Okay, and there's truth to all of them. They are economists, folks. They're much smarter than any of us, much smarter than me, much smarter than Steven. But the one thing they can't do, just like the one thing I can't do, the one thing Steven can't do, and the one thing any of you can't do, including BB Singh, is time the market. There is no timing the market. You just cannot do it. It has been proven that no one can time the market. Even Ray Dalio, the founder, former CEO of Bridgewater Capital, the largest hedge fund in the world, has tried timing the market based on such a complicated system that he has built to track this. He was so certain the markets were going to crash. He was wrong. He wasn't wrong. He was dead right. But what he couldn't predict is the actions the government would take with the printing presses, and that kicks the can. You've all seen it, right? When you don't want to do something, what do? You kick the can. You put a Band-Aid on it. What does the government do every time they're going to shut down? They kick the can. Are they fixing the problem? Absolutely not. They're not fixing anything. They're literally putting a Band-Aid on and say, oh, we'll get that in 2 months or 3 months or 6 months. They're never fixing anything. Nothing out there is getting fixed. Everything is just getting worse. And here we go. What do you got there? I'm going to show TikTok this, and then I'll show.
Yeah,
Instagram.
they're just, they're coming out today saying the Fed's interest rate policies can't fix this inflation, and talking about why that is. And, part of the discussion is, of course, the Federal Reserve, for those who don't know, their mandate is basically to maximize employment and create stable prices. So keep inflation in check. For the Fed, their goal inflation is right around 2%. So, as you guys know, we were at 6.2% this last month. I guess the new figures come out on Friday, so we'll see where that's at. So they're well above where they are. But what they can do to fix that typically, is to raise interest rates and start to cut back on some of their, money that they're pumping in, what they call tapering, which is, they're putting about $250 billion a month right now into the markets. They need to taper that back. So if there's not as much money going to the markets and interest rates start to rise where the flow of money is no longer free or very, 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 very cheap, typically that will tighten things down and that'll control the runaway inflation. And then, there's arguments back and forth on whether the labor market right now is helping drive some of this and stuff like that. But, more money in the markets, more of this free money and this low interest rate and all the money being pumped in and given out through unemployment, all this other stuff flowing in with less people working and creating progress. I mean, that just, common sense says that drives inflation too. So that's why we're seeing all this crazy inflation. And basically they're kind of admitting right now that there's not a lot the Fed can do without either crashing the economy to get this fixed. And, they're starting to say it. And Chris, you've talked a lot about this in the past, but it's starting to come to the mainstream. The real worry might be deflation. And that may be the central bank's biggest problem over the long term.
Well, the central bank doesn't like deflation because deflation brings asset bubbles down. And also deflation is just not good for the government, but it's good for all of you. It's not good for you if you're on the wrong side of the coin, but it's good for you because then all of a sudden pricing comes down. Then all of a sudden you have opportunities to buy into things at actually real prices, fundamentally sound prices, like real estate. Is it fundamentally sound right now? Some would say yes. A lot of people would say yes. I would say right now it's a speculative bubble. You can find deals, but you got to look really hard. It's like a needle in a haystack. All right, if you like that video, make sure you check out this video right now. And also don't forget, subscribe to my channel and don't ever forget to smash that alert button. We'll see you on the next one.